Prices have cooled down over 30% in the Greater Toronto area. Is it a good time to buy, sell, or invest? What is one supposed to do with these rising interest rates and falling off of prices? The media does a great job with creating fear in your minds with scary headlines, but the truth is, whether you buy or sell in a peak market with low interest rates or with a cooling off market with high interest rates, your monthly payments end up being the same. The only difference is what goes towards your principal and what goes towards your interest. They're talking about another rate hike in the near future. Sure, the prices may drop, but with the higher interest rates, you may have the same monthly payments or slightly higher, and now you'd be paying more towards your interest than your own principal. Welcome to my channel. My name is Sid Chandra. My team and I practice real estate here in the Greater Toronto area. Many of you viewers have reached out to us and we've been able to help you reach your real estate goals. If you'd like to book a buyer consultation, seller consultation, or simply to chat about some real estate investments, please feel free to click on the link below and I'll be happy to chat with you directly about your real estate goals. I've had 3 clients reach out to me in the last week who want to upsize into a bigger or better property. The market is perfect for such situations. If you've owned your property for over a year, now you can sell it at a higher price and buy a more expensive property with major savings. You also get the liberty of more options and conditions on the offer to be able to negotiate far more than you could in the peak February market. What about interest rates and affordability? Yes, now you'd qualify for a lower purchase price with the rising interest rates. However, the property that you may have been looking at before the interest rate hike has likely dropped in price as well. So now you can qualify for that same property and the monthly payments will likely be the same as they were before. The only difference is now you have more properties to choose from and better leverage when negotiating on the price. Here's another situation. We had a client who wanted to keep their existing principal residence and buy another property to move into. We looked at the numbers and we realized they wouldn't qualify for a higher purchase price because of the existing mortgage they had in place. So what did we do? We suggested buying an investment property that's smaller in purchase price to be able to enter the market and diversify their portfolio. This way, now they'll own 2 assets versus 1 and take advantage of the appreciation down the road. In any case, you can't go wrong buying a property in this market. If you hold on to your investment for 3 to 5 years, you'll see massive returns over the long term. What we're experiencing right now in the market is a psychological shift more than anything else. Construction costs haven't dropped, oil prices haven't dropped, inflation hasn't dropped, the supply in the market has not increased. Then why are property prices still falling? Normally, when an announcement is made in the real estate or lending industry, there is uncertainty in the market, which leads to panic and a change in price. Historically, the price changes have always been temporary and real estate has shot up over time. Take a look at this 20-year history of the prices and interest rates in Toronto. As you can see, the interest rates have been on average 6 to 7% since 2000. Then since 2006, the government began lowering interest rates, which led to higher real estate pricing. High interest rates have never stopped us from buying properties. It's other factors like oil prices, construction costs, and most importantly, supply and demand that dictate whether the prices will rise or fall. We recently had another situation where the pandemic hit and people thought the prices would drop. Take a look at this chart. All the major institutions predicted a drop in price, especially CMHC. They predicted a 9 to 10% drop in price. Imagine if people followed their advice, they'd lose hundreds of thousands of dollars in gains. The interesting point is that all these institutions derive their data from market research and facts. To everyone's surprise, prices shot up in 2021. No one knows where the market is headed. Even the greatest economists aren't sure what the prices will look like in the near future. If they say they know, they're lying. The only factor we can control is our finances. If the time is right for us to move, take action. Can you make money in this market if you're a seller? Absolutely. If you bought your property before 2021, prices are still up. If you buy, sell, or invest, if you hold on to your investment long term, it will always play out. That's it for today. What are your thoughts? How long do you think the prices will stay cool? What do you think will happen to the interest rates? Comment below. I usually hang out in the chat to answer any questions. If you like this type of content where we have a conversation style video rather than me talking about data and numbers, please hit the like and subscribe button so I know what type of content to put out moving forward. Remember, we provide results that move you.